Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is Wednesday, September the 11th, 2019. September the 11th, 18 years ago, since that fateful day. It sounds so strange saying that, but 18 years. Time flies, and wow, how's the world changed? God bless all of those who perished and their families and the nation, to be honest. It's never been the same. Let's begin with what we're going to talk about this morning. We're going to talk about the headlines that are driving the market at current. Then we're going to segue over into today's economic data, what to expect. Then we'll chat a bit about the pre-market activity, and we'll leave off with our watch stocks and members stock chart request. But before we get started, if I could ask you to please smash that like button, share this video with a friend, leave a comment below. I'll definitely get back to you. All of those really do help my channel, and I thank you in advance. So let's begin with the volatility that we're seeing in the market. Yesterday was a great trading day. Volatility spiked, then pulled back. What is the driver? The driver is that partly, the fact that we had a news headline come out of the South China Morning Post yesterday that the Chinese may look to buy more U.S. agricultural products. Now, in all probability, that's not going to happen because they do not want President Trump back in office. However, if they can bribe President Trump into a bad deal, they will do it, because they know that this will probably be the best bad deal that the United States will sign ever again. And what's the key motivator for China posting this story? And have no doubt it's the Chinese government posting this story. This is it here. China is reportedly preparing to offer to buy more ag products in exchange for delaying a series of U.S. tariffs, important, as well as easing the supply ban on Chinese telecoms giant Huawei. Huawei, which is their state-owned, they don't want to say that, but it's a state-owned telecom giant, which gives them tentacles into every country and their 5G network. So many people are out there saying that nobody wins a trade war. I agree with that, and it's the American people that do pay for the trade war. But isn't that short-sighted? If everybody takes a look at the actions by the Chinese over the past 20 years, where it goes back to the downing of a U.S. spy plane under George Bush back in around 2001, and you look at the activities of building military bases on the Spratly Islands and a naval base in Cambodia, who's at war here? And it is not best to have a trade war now with no fatalities rather than have a hot shooting war down the road, which is probably inevitable anyway. I digress, but food for thought. So this is the driver that's popping stocks higher. Have no doubt about it. The stocks that are moving higher are the most shorted stocks. You did finally see some activity in the IWM yesterday, the small caps. Let's see whether or not that continues. Let's move on to the economic data. Let's begin with yesterday's NFIB report, which came out and hit a 5-month low. It was weak and weak across the board. What did stocks do? They did what they should have done. They tanked. However, what salvaged the market? That nugget of gold of a trade deal, no matter how bad it would be, coming out of China. Today's important economic data is the producer price index coming out 8:30 Eastern Standard Time. That's a market mover. That's a measure of inflation at the producer level. The question then becomes, if inflation is hot, is inflation being passed along? Meaning, are the costs of increased costs to produce goods at the producer level being passed along to the consumer? And we'll know that answer on Thursday when we get the CPI data. And then, of course, we get the core number. This is what the Federal Reserve does. They back out food and energy because that doesn't matter. It's volatile. So they don't factor in food and energy into the core CPI. Oh, how in tune the Federal Reserve is with the American people. Let's move on to the charts. All right, I want to kick things off with the 10-year bond price, not the yield, but the price. And you can see, this is a 4-hour chart. These will all be 4-hour charts. Oh, by the way, did I ask you to hit that like button, share with a friend? Thank you very much. And you could see that we peaked out here on the 3rd after we had a false flag breakout. We are now putting in lower highs and lower lows. And yesterday, we smashed right through support like a hot knife through butter. So we're going to turn this line here green because it'll be bullish for bonds if we manage to close back above it. But right now, the path of least resistance for the once hot and fiery bond market is to the downside. The question is, who's dumping our bonds? Think about it. So at current, yields are pressing higher. And while still at artificially low levels historically, allowing for stocks to rally, if you get much more of this bond market sell-off and yields pressing higher, well, yes, you'll have money coming out of the bond market eligible to go into the stock market. The question is, do traders get afraid that yields are pressing too high and the cost of servicing our debt is getting too expensive? That's a conversation that may be premature, but I'm a contrarian, and I start thinking about that right here, right now, before everybody else starts talking about it. We want to be positioned. Taking a look at the U.S. dollar. The dollar, very strong price action overnight. We have broken out of this triangle formation. The path of least resistance in the short term, again, 4-hour charts, in the short term is to the downside. We have broken out. We are now beginning to retest the breakout point. I think we're going to pull back, retest, and that probably proceed higher. But if the producer price index comes out hot, that may cause some pressure for the U.S. dollar. Now, when we talk about the dollar, we like to talk about gold and silver. On this 4-hour chart, we have broken out. We have recaptured the upper band of this declining downtrend channel. We did so on a closing basis this last 4-hour bar, which closed at 5 a.m. Here's our new bar. We're doing a retest. The question is this a bottom for gold? Well, we are back above the ever-critical psychological support level of 1,500. I think we'll bounce around here for a while. People ask me, Bob, are you still bullish on gold and silver? Absolutely. The obvious follow-up question is why? And I give him my standard answer. I have 22 trillion reasons and rising as to why we like gold, silver. I don't care if we have a trade deal, no trade deal. There's no getting around the fact that we have 120 trillion, not billion, 120 trillion in unfunded mandates here in the United States, guarantees by the federal government to any number of parties, whether it be Social Security, whatnot. And there's no getting around that, at least not without damaging our good faith and credit. So gold looking interesting, finally beginning to catch a bid here. Let's move over to silver. Silver we booked profits on several weeks ago. I was on a webinar with TrendSpider back on August the 18th. If you're interested in their software and you want a 25% discount, click the link below. It'll take you over to their website. Use discount code CT25Z to get a 25% discount. I was on their webinar, and I went through the silver trade. They asked if I was still bullish. I was still bullish, but the price of silver had gotten ahead of itself. I said, allow for a pullback. We now have that pullback. Are we at a bottom? I don't know. The reason is right in front of our face. Do we have a head and shoulders setup? Left shoulder, head, right shoulder. We have broken the neckline, but we have recaptured it, and we're now consolidating. The longer we trade sideways, the more this becomes an improbable setup, meaning the probability of us breaking down below the neckline once again, because we're consolidating all of these gains here, and we're setting the stage for a continuation move higher. So I'm optimistic about silver, but short-term pessimistic about the setup here. Lots of volatility in the precious metal space, especially with yields rising and the dollar beginning to break out and the warm and fuzzies coming out of China, albeit as shallow as they are. Moving on to Bitcoin, and then we'll wrap it up with the futures market, the stock market futures. Now, Bitcoin is holding on to the 10,000 mark. This trading channel between 92.50 and let's call it 10,900, is becoming a great place to trade Bitcoin in a channel. So I would be a buyer on a retest of this ever rising, slightly rising lower band of support for Bitcoin, but I would sell into this resistance level. So right now, Bitcoin is simply a crypto meant for trading. That is it. We don't have a major breakout, at least in the short term, on the horizon. That all changes when we break out and above 11,223. It's at that point where we'll see a resumption of the uptrend. Right now, it's just simply a trading vehicle. The S&P 500, we are flat on the morning, slightly down. We are trading below, on this 4-hour chart, below the 20-period moving average in blue. It doesn't matter where we trade into period. What matters is where we close. So it appears as though the path of least resistance anyway is to the upside, but we do have a good amount of overhead supply here. So I'm cautiously optimistic on the market, given that we are heading into the 2020 elections. After that, given the need for the Federal Reserve to cut rates while the U.S. economy, or the GDP, is expanding, and I put expanding in air quotes, it's concerning to say the least. So I'm cautiously optimistic in the short term about the markets. After the 2020 elections, I will become very, very concerned about these markets. And we will be looking to the short side. The NASDAQ. Now, the NASDAQ, which is down slightly this morning, but similar to the S&P 500, for all intents and purposes, we're flat on the day. Now, which is different from the S&P 500 is that we have been trading consistently since the 9th below this 20-period moving average. So it's acting as resistance. That's not a good thing. Now, if this were one bar, or if we were trading like the S&P 500, let's go back to it to show you. We spent some time below the 20-period moving average. We recaptured. And now that I'm looking at this again, it's growing a little bit concerning, the fact that we're finding it difficult to hold the 20-period moving average. Let's watch how we close out this 4-hour bar. This 4-hour bar closes at 9 a.m. If we close down below it, I would grow a little bit more concerned about the S&P. And as for the NASDAQ, getting back to it, the fact that this is acting as now a declining ceiling is a bit of a concern. So keep an eye on the NASDAQ, and I wouldn't be a buyer of either one of these indexes unless, of course, we began to press to new daily highs, meaning we cleared these resistance levels, and frankly, I would remain small until we cleared the overhead supply, and we are at all-time highs on both of these indexes. And again, going into the 2020 elections, I would not be the least bit surprised for that to happen. Okay, folks, now let's segue over and into our watch stocks and our member stock chart requests. But before we begin with these symbols, please hit that like button. It helps me out a lot. Share with a friend. Leave a comment. I will definitely get back to you. Let's begin with MMSI. Never heard of it? Merit Medical Systems. This is an extreme oversold stock. We're going to go with a daily chart. I'll do a deep dive with members as to where we want to get involved on a historical basis, meaning historical monthly support. And you could see on this chart, we have RSI at current at 18.41. So it was more oversold. It's been drifting higher. That's a good thing. So we're beginning to see signs of life, higher lows on RSI. And when you look down at the stochastics, they are hooking up. We have a W formation formed, and we are now putting in higher lows. Now what we need is a breakout above this peak for new higher highs. The question we need to ask ourselves prior to entering this trade, I'm going to throw some lines up here while I speak, is what is our catalyst to propel these shares higher? What might that be? Are these shares of value to value fund managers, or Are there a large number of shorts waiting to get squeezed? Those are the questions that we need to ask ourselves. And even if there's a large short interest, are there a sufficient number of shorts asleep at the switch waiting to get squeezed? And I'll give you a case in point. We just closed out a long position of carbonite where we killed it. We were trading the options, we were selling puts, bringing in premium, and we were also long of the common shares. But we knew, let's bring up the chart really quick. We'll come right back here. Okay, so we were buying down here. I did a video on this. I'll link to it at the end of this video. But you could see that we shot up higher, and we knew that as we were accumulating a position by selling puts to bring in premium and by buying the common shares, our catalyst was a short squeeze. And sure enough, that's exactly what occurred. And we booked those profits and moved to the sidelines. So the question needs to be asked here of MMSI, do we have a similar scenario that will help benefit us? Do we have shorts asleep at the switch? Now, we did bounce off of the 25.67 level on the 10th. Prior to the 10th, we saw resistance up at around the 31.52 level. So right away, that resistance level becomes primary target number one, meaning if I opened up a position now, assuming that we are at historical support, it's my anticipation that we will all probability rally up to that resistance level. Now, I will point out, we saw a lot of volume on the 10th. We are putting in higher lows and ultimate oscillator. No higher highs yet. So are we at a bottom? It all depends upon where weekly and or monthly support levels are. Are we there yet? If not, we avoid. If we're at historical support levels, well then perhaps we have a trade opportunity here that we should begin to build a position on. So members, more to come. The next chart up, and another extreme oversold stock, is LAIX. RSI at current is 12.49, very oversold. However, keep in mind, it's a single-digit stock. And we know from past experience, vast amounts of past experience, that when you have stocks that are in the single digits, especially when they are below $5 per share, you can get RSI below 10. So it's best to wait for higher lows on RSI. So let's take our crayon out. Here's our resistance. And you can see we continue to pressure the lower band of support. Stokes beginning to appear as if they are a coiled spring ready to pop. Now, you could see that we have resistance above. They tried to hold the support level here at the 5.35 level. It failed last Friday, and it appears as though we're going lower. So the question then becomes, where is historical support? And until we answer that question, and I'll do that tonight on Market Wrap with members, we'll identify where we have the best risk-reward entry point to begin accumulating shares. That assumes that we have a rationale, a catalyst to send the shares higher. Do we have a short squeeze potential? If yes, then we further research the trade. Are the shares of value? If yes, then we will continue to research and analyze until we find a good risk-reward entry point. If we can't find a reason to get involved with the shares, well then what's the sense of trading it, right? Weak stocks, as I always like to say, weak stocks tend to get weaker, and absent a catalyst to the upside, I wouldn't see a reason to go trading the shares. But in this case here, I get the vibe that in all probability, we have a short squeeze potential. So members, more to come on the historical support levels on LAIX. Now, before I leave here, volume is still above average, okay? We want to see these volume bars drop down because this is institutional money. We don't want to fight these guys. Moving on to Google. Now, for disclosure purposes, I opened up a short position on Google here on the 9th. And it was immediately after the announcement of the state's attorneys general, 50 of them, filing suit against Google. I have been warning about this for over a year. Go back to my YouTube videos. I have been pounding the table about this. I've said in the past that while the technicals, as recently as last week, I was asked by one of my YouTube viewers in a comment, he asked, what do you think about Google? Am I still bearish? And I said, well, technically, we look good. Let's go to the weekly chart. He asked me here, weekly basis. I mean, how can you argue this? A beautiful bullish key reversal. It appeared as though we were going to go higher. And this week we did. Then the news came out. Now, could it be a situation where it's a buy the news event? Everybody was expecting it. Well, you know what? I have to keep an open mind. Simply because I predicted it and we got the news doesn't mean that my call was right until, of course, we begin to break below the lows of the 9th. And if we do break below that low, I think that we're coming down here to 1,150 in a heartbeat. Now you can see that on the 9th we flashed a doji star formation. When you're in an uptrend, as we have been since June, you really don't want to see a doji star formation near the top of a trading range. That's a sign of indecision. There's a tug of war between bulls and bears, and it's a signal that there may be a trend reversal. And on the 10th, we did pull back. We managed to rally back off of this primary lower band of support. If we break the support level, we're going a lot lower. Now to recap here, while I'm bearish due to headline risk, the weekly technicals still look good. The daily technicals, I'm not all that fond of. That being said, if we begin to break out on Google, who am I to argue that the shares aren't going to go higher? It simply means I'm fighting the wall of worry, which is going to allow this stock to move higher. And when you take a look at a monthly view here of Google, not a half bad consolidation. So again, the technicals look good for Google on a higher level view, meaning a weekly, a monthly view. And in fact, when you take a look at Google on a monthly basis, we broke out on RSI, and we did so here in July. Ever since July, we've been pulling back, retesting the breakout point, and now we're hooking up. So what I try to do here is I try to be as honest as possible. I admit it, I am short of the stock. But, however, I don't want to delude myself. The monthly chart is looking good. The weekly chart is looking good. I had expected a break on negative headline news, which I had anticipated. Bravo for me for calling the headline risk. But if there's no reaction by the stock, well, then I'm fighting the market, and there shouldn't be, right? So we need to keep an open mind, and if we have to stop out with a small loss, so be it. The next chart up, Baidu. Daily chart, looking good here. We have higher lows on price, and we are nearing a breakout point on a close above, let's call it 111.50, 111, thereabouts. Ideally, we're going to pull back and a retest of the breakout point. RSI has already broken out. We have higher lows. We have a breakout. We have an indicator leading price performance. Volume on Tuesday was very nice. We have higher lows and ultimate oscillator. I don't see any reason why these shares couldn't continue higher. And what I like here is that if we clear the 121.80 level, you have an air pocket that's just waiting to get filled all the way up to, let's call it 153.80. So a lot of upside potential here without a lot of downside risk. I like Baidu. So members, stay tuned for an alert. DPST, I spoke about this last night on Market Wrap. I spoke about it over the weekend with members. Yields have been pressing higher, and that's allowing the banks, in particular the regional banks, to rally. Now, we can't go chasing the DPST. At current, it's leaning right into the third standard deviation Bollinger Band in red. It's not supposed to be there. We need a pullback, but the indicators are looking rock solid. Volume, very good. So DPST on our watch list as a buy. MDU Resources. I spoke about this one, man, it seems like a year ago, but it's not actually all that long ago. back here while we were in a trading range. Actually, it was over a year ago. I started talking about it back here in a bull flag setup. Then we began talking about it again back in the spring, and we were looking for a breakout. We got the breakout, and you can see it's been off to the races ever since. Now, I think we have more upside potential here on MDU, and I mean even on a monthly chart. If you take out the noise, if you smooth out the chart by simply taking a look at the monthly chart rather than a weekly chart, it really gives you the higher level view of as to where these shares have been and where they are probably going. And you can see that we have been in a very, very tight consolidation range for nearly a decade. And now we are flirting with the upper band of resistance on a monthly basis. And I spoke about this regarding gold over 8 months ago when it began to break out of a monthly breakout, a long-term consolidation. Nobody wanted to pay attention to it. We were. And you have a similar setup occurring here. Now, while I like the monthly view, I like the weekly view, I am concerned that if we bought the shares today, we don't have all that much upside before we hit this resistance level. I would rather wait for a close on a monthly basis above this resistance level. That is going to get the algos really, really excited. Now, on a daily basis, again, we're leaning into the third standard deviation Bollinger Band here. You need to wait for a pullback. Allow the shares to come to you. They've got this is like a horse that's left the barn. All right, you have resistance above. Don't go chasing it. You don't have a lot of upside potential here, but you do have some downside risk. Wait for a close on a monthly basis above that monthly resistance level. And if we close there, well, then it's game on for a long time for MDU Resources. The next chart up, Las Vegas Sands. This is a stock chart request. I'm not a big lover of the discretionary income stocks because with yields rising and with the amount of debt that the American consumer is carrying, I worry about the weakening economy. And while we have been strong these past few days, is this a short covering rally? We don't know. Weekly chart. The weekly chart looks good, but a bit extended here, and we have a lot of overhead supply. I would avoid these shares for now. I mean, if we have a decent setup and a sufficiently high number of shorts waiting to get squeezed, I would look to swing trade the stock. But at current, I mean, I think the shares have moved higher and the cream has been taken off the top here. So at current, short-term swing trade, I would not entertain, but I wouldn't short either. Shopify. All right, so we called this breakout back here, and we reiterated the buy back here on this bull flag setup, this consolidation. It's all over now. We're now going to get a correction. We have lower highs on RSI and a confirmed breakdown. Same deal here on our Stokes. And we have broken the monthly band of lower band of support. Stoke RSI, a complete and utter disaster area. This choppy action is no bueno. We only have 2 trading days in the books thus far, and we've already managed to put in an above average week in terms of down volume, assuming that we close out the week to the downside. You know, maybe we'll rally back and we will recapture the support level for all I know. But at current, it does not look good. So if you're thinking about buying this dip, I would truly caution you not to do so. Daily chart. All right, so on a daily chart, you have both lines on Stokes down below the 50 level. What I always teach members is that when you get Stokes down below the 50 level, what makes them dangerous when they are declining and down below 50 is that you'll get rallies in the morning, perhaps midday, but by the end of the day, you are selling off into the close. Rallies tend to fade. So Shopify, I would avoid. That being said, I love the company and we will keep an eye on it. And that is it for this morning, folks. Please hit that like button, share with a friend, leave a comment. You'll be doing me a big favor. Members, I will talk to you throughout the day. Members will be in touch, and I will speak to you this evening on Market Wrap. Everyone have a profitable trading day.